Hi guys, welcome back. Today we'll be going to looking at the top healthcare stocks for 2021. With the coronavirus vaccine coming out, the healthcare sector will be one of the sectors that will make the biggest comeback. So hopefully you find this video helpful. If you do enjoy, consider subscribing. It's free and it helps me out a ton. If not, thanks for watching anyway. Onto the video. So we'll be going through today. We'll be going through a few things. We're going through 3 different healthcare stocks. We're looking at the future growth of these companies. We're looking at the valuations of these companies. We'll be going through why these companies are better than their competitors, and then we'll be looking at entry price through their technical analysis. So let's begin. So the first the first company we'll be going through is CVS Health. Its ticker symbol is CVS. CVS Health is one of the largest healthcare companies in the US. It has an enormously retail footprint, and it operates mainly through its 3 biggest subsidiaries. The first subsidiary is CVS Pharmacy, which is the largest retail pharmacy chain in the US. The second subsidiary is CVS Caremark, which is the second largest pharmacy benefits manager in the US. And its third is Aetna, which is the third largest health insurance provider in the US. So you can see CVS already has a very big footprint in the retail industry with its pharmacies and Caremark, but also in the healthcare system as its own, in the healthcare sector as itself, with its having the largest pharmacy chain, the second largest pharmacy benefits manager, and the third largest insurance health provider. On top of the retail pharmacy units that they operate under CVS Pharmacy, they also have more than 1,100 private clinics as well, so that's an extra plus. So as you can clearly see that CVS has influence over all parts of the healthcare system, and it's the largest healthcare provider in terms of revenue, with the second largest being United Health Group. So its revenue is about 256 billion, while United Health Group is about 240 billion. So it's a significant difference. So even after COVID, the revenue of CVS continued to go higher, showing the strength of the company. However, their their profit decreased because they had to spend more. But the earnings and revenue in the future are set to grow alongside the industry, about 10% for earnings and 15% for revenue. And the rising demand for healthcare with the coronavirus pandemic coming to an end with the vaccine, the growth will be even more than that, I believe. So in terms of valuations, this company is pretty cheap. It has a P ratio of 12, which is cheaper than most of its competitors, which have a P ratio of 25. And its PB ratio of 1.4 is also pretty cheap compared to its competitors, who have PB ratio of 4. So in terms of future growth, it's not massive growth, but it's a good solid stock, trading at a pretty cheap valuation as of right now. So here, if you invest in CVS Health, you're getting a solid company, trading at much cheaper than its competitors, while still being some of the strongest players in the market. However, a downside would be that you're not getting the growth that you would get, let's say, investing into Apple or Amazon or Tesla. So if you do look at the charts of CVS, you can clearly see the stock price has been bouncing between the $74 mark and the $57 mark. And here recently it breached the $74 mark for about the first time and since the beginning of the year, where it went around 77, but now it's back below the 70. It's close to the $74 mark here. So here the stock price can go 2 directions. It can either come back down towards closer to the green, or it could go back up, breaking the red line and going up towards $80, $82. However, based on recent trends, what seems to happen is it will come back down. So I would put a buy price of this company around $70. However, analysts have said that a fair value estimate of CVS is $145. So if you're going off the technical analysis, I would put an entry price of $70. But if you're going purely on value investing, $145 is a fair value entry. So current price wouldn't be too bad either. The next stock we'll be looking at is Viva Systems, ticker symbol VEEV. This is a much higher growth company than CVS, but also trades at higher valuations. So Viva Systems operates in the pharmaceutical CRM services, customer relation management. It's been the leading provider of CRM tools for pharma sales reps who have a unique complex relations with physicians and government regulators. So it operates both in terms of accessing the clients and accessing the regulatory aspects of it. But after that, it expanded from CRM. It also supplies and offers more tools, such as the life science industry, and uses to track information during drug development. So here you can see that it helps reach out to clients in regulatory, but it also helps in the individual testing that goes on there. So it's kind of in everywhere in the the accounting part of it or the regulation part of almost every pharmaceutical company in the market as of right now. So it operates in a very, very niche market. There are other CRM services, but they don't necessarily focus on the pharmaceutical industry, and it's like a one of a kind that operates in the medical institutions, and that's why it doesn't have many competitors, and that's why I believe it'll do very, very well in the future, because they don't have any major competitors as of right now. They've also beginning streamlining the way drug makers conduct clinical trials with apps, so that allows physicians and volunteers to participate in clinical trials without being face to face. So the reason that why I believe that this company has a very, very promising in the future is the fact that it doesn't need to innovate or create new drugs or medical appliances. It just profits of other companies that does, and the fact is that they can operate with multiple clients at the same time, so their revenue streams will always be increasing. We can see the same with its earnings and revenue set to grow 15% and 17% respectively, which shows that this company is showing pretty good growth in terms of the future of this company, which is pretty good and pretty solid growth as well, especially when it's compounding over the next few years. So here you can see Viva Systems. The rating that I would give it right now is a very, very strong buy. Here you can see that the two lines are converging, the green and the red, and with it recently rebounding of the red, it looks like the stock price is ready to shoot as of right now. So I would give it a buy at $286, which is a pretty decent $286, which is a pretty decent buy for a company that's growing pretty fast, and its stock price has risen more than 100% over the last year or so. So currently it's trading at a pretty good price if you do choose to invest, and based on recent trends and based on the technical analysis, it looks like this stock price will shoot up very soon in the future. The last company we'll be looking at is Intuitive Surgical, ticker symbol ISRG. This company is probably the strongest out of the three, offers both a mixture of safety and growth between the two. That's why I saved it for last. It develops robot surgical devices, and it was hit very, very hard by COVID, as many non-threatening surgeries were cancelled, and this led to a 22% drop in revenue and earnings in Q2 and a further 4% drop in Q3. But as vaccines are beginning to come back into the market, the industry as a whole will perform much better, as it will be a market leader. And because of this, because it's a market leader, it has Da Vinci robots, surgical devices that it creates, and that's why I believe it'll be a very, very strong buy. Many non-threatening surgeries were cancelled, would now be back on, and because of this, you could see that its revenue and earnings shoot up in the recent future. What sets it apart from many growth stocks is that this company actually has pretty secure financials, and because of this, the company has been able to play out competitors or perform better than many growth stocks as well, because they're able to grow their business with lower risk compared to many of their competitors or just companies in the market in general. And because it produces robots in the for surgery, this will no doubt be the way of the future. It's like buying the next Apple or Amazon 10 to 15 years ago. Currently, this company operates in a very, very small market because the industry that it operates in hasn't improved or like bursted yet. Currently, they have 1.2 million users of their Da Vinci robots, but ISRG expects it to go to 6 million per year in the near future and more than 20 million in the long term. So the growth prospects are always there. So here, if you look at the technical analysis for Intuitive Surgical, you can see that this company has been a very, very good uptrend over the last year or so, more than the last year, over the last 3 years. It kind of dropped down in May, down to about $400, which is about the cheapest it was since 2017. But most of the stock price, barring that big drop, has been operating between the red line and the top red line and the green line. So here, what it seems, it's once again hit its top red line. So the stock price will come back down to about $700 before shooting back up again. So I would give it a buy at around $700. So just some final words. All the companies that I've covered have a very, very strong competitive advantage. ISRG and VEEV are both high growth stocks. ISRG and CSV are both solid long-term stocks. CSV is trading pretty cheaply at a good price right now. ISRG and VEV are expensive based on technical analysis, based on valuations, but are good buys based on technical analysis if just in general. but overall, all are very, very good buys for 2021. So here you have a mixture of solid high growth, solid low growth, and slightly more high growth but less less safety. But as always, do your own due diligence, and thanks for watching. Bye.